Hi everyone. So I started building this portfolio in the US roughly in January, and right now it is at an alpha of 17%. In the last 2 months, I had built in a lot of positions and they have done exceptionally well for me. Now, the idea behind this video is not for me to talk about whether you should invest in Indian stocks or US stocks or Canada stocks or China stocks. The idea is to communicate a very simple point that the world is full of opportunities. And if you have access to different asset classes, then you will be able to take advantages of asymmetric opportunities. So on this video, I'm going to speak about 4 or 5 critical points because many people are getting troubled that, the debt in the US is going up. Many people are getting troubled that, in India, the income levels are not growing. So should we even consider like India? I am a global diversified investor. In fact, I run a hedge fund in Dubai where my primary goal is international diversification. So this is an area where I am specializing. So I'll share some of the notes with you along the way for what I do my fund research on. In case you are interested, well and good. If you see value in diversifying, do it. If you don't see value in diversifying, don't do it. But at least listen to these 5-6 critical points. If you don't have the time, don't watch this video. This is a serious learning video. I am an industry practitioner. I teach you from that open, honest lens. So if you like it, do press the like button and we will get started. So first and foremost, let me just quickly take you through this important chart. And what this shows is the difference in terms of the overall return from roughly 2019, just before COVID, up until now, between Nasdaq Composite, right, which is the US tech index, and Nifty 50. So what you will see is that roughly Nifty has given 110% run up in the last 5-6 years, and Nasdaq Composite has given 122% run up. But here we need to adjust for the fact that INR has depreciated compared to USD in these last 5-6 years. So at least add roughly a 15% more fall. So effectively, if you convert everything in dollar terms, then Nasdaq would have given 122% run up because here they are showing absolute run ups, and Nifty 50, because the return here is in INR basis, this would have been maybe like 95%. So there is a healthy difference between US tech market and Nifty 50. Many would retaliate that, hey, why are you comparing like Nifty 50 with Nasdaq? Or why can't you pick like something like S&P 500? See, there is no apples to apples comparison. This is what it is. It's your call whether you want to pick like Nasdaq, don't pick Nasdaq, whatever you want to do. I'm just showing you broad market level data. Nasdaq is a respected index in the US. Therefore, I have picked it. So point number one is that there is merit to investing in the US. Now, let me show you the second chart, which kind of outlines the point why it makes sense to invest in India and what type of investing you should be doing. The classic case study that I will pick here is that of something called as Midcap 150. The same logic can be applied to small cap 250 index in India. In India, what is happening is that we have a very large unorganized space, which is getting organized. Now, what is the meaning of unorganized getting organized? It means that majority of our businesses, even now 50 to 60% of our businesses are in informal economy, okay, which is cash transacted economy, etc. And they are getting more and more formalized, getting under GST, all that stuff. A simple case study here would be that of mom and pop retail stores. Now, many of those retail stores are getting shut. Why? Because companies like Zepto, Swiggy, all those companies are coming in. They are doing 10-minute delivery. So these small shops are closing now, and they have been subsumed or being eaten up by big companies like Blinkit and all that. Okay, so that's called the market getting from unorganized to organized sector, and India exhibits one of those key trends. This has happened in the last 5-10 years also, and now it is accelerating really fast. In the US, this is not the case. US is a monopoly driven market. For example, companies like Google eat up like small startups, all that stuff, but the economy overall is very formalized. It is organized to begin with. Okay, so I hope that this point is clear. In the US, the primary USP of investing in the US market is tech. If you want to invest in tech, go to the US. If you want to invest in unorganized to organized play, then India is a great market. Okay, so both Indian market and the US market reflects that. Back to that story about Midcap 150. Why did I pick Midcap 150 as a case study? It's very simple. Because what happens, what is the meaning of mid-cap, small cap companies? Well, these are like small companies that got organized and came to like the stock market. And where will they get? Where will they be in segment, right? So they'll be in small mid caps. Now they will grow with time and they will become like large caps. That's when real money is to be made in the Indian market. And therefore the small cap, mid cap indices in India grow really fast. And let me pull up Midcap 150 index. And here what you would notice is, let me redraw this. So for example, from here to here, you will see that from its bottom at COVID to now, the mid-cap index in India had given almost a 450% return. Okay, since then it has fallen quite aggressively, right? And then it has bounced back a little bit. But there was a very impressive growth in this period of 2020 to 2025. Now you'll say that, hey, okay, this includes like COVID. So if we just consider like another phase, right? So what could that be? So for example, if we consider it from here to here, this was a rally that I was able to capture. This was a 100% rally. If some of you would have been following me, you would know that I was able to successfully enter and exit this in very large tickets. Okay, so in India, the second key point that I would like to highlight is that the opportunities are in mid cap, small cap categories. That is where money is going to accelerate really fast. So our stock market is going to do really well on that bit. In the US, it's primarily tech. So what is the summary that you can draw out of it? So point number one is that if you're betting on artificial intelligence, machine learning, all this stuff, US market is a great market. Money can be made there. Have I made money? Yes. You can again check this portfolio. I will leave the link in the description box also. Number two, is Indian market bad? Absolutely not. Indian market is great, but you must understand how to use it. Okay, now again, let's just quickly go through this discussion. For example, here you would see that if you go back and look at this phase from 2018 all the way till 2020, so 3 years, these small mid-cap indices in India gave how much returns? 0%. So let me mark this region out for you. It will give you a little bit more clarity. Then the index started to run, right? The index ran from here to here. Then it consolidated again. How much returns did it give? In this 2-year period, it gave again 0% run up, right? Here it was almost how much here? 3 years, right? So 0% run up. Then it did what? Then it ran again. It gave like 100% return. So this phase, okay? And this period ended in 2025. So now what is happening? Well, it is consolidating this small mid-cap index, okay? Now it might consolidate for the next 2 years, but if you aggregate small and mid-cap right kind of stocks here, right? And even if you aggregate index, the chances are that, hey, this consolidation will be over and then there will be another rally. Okay, so this is how small and mid cap indices operate in the Indian market, and this is where the opportunities are. And now why is this the case, right? I mean, I try to apply my brain. I spoke with a lot of people regarding the same. What is happening in India is that, see, the PE of certain stocks is very bloated. Okay, for example, if you check Geo Finance P, if you check Bajaj Finance P, if you check a bunch of companies P, what is happening there is that there is massive PE expansion that has taken place for Indian companies. Just for context, if you consider, let's say, Adani Enterprise. Now, I have not checked it recently. I'm assuming that Adani Enterprise would be trading at somewhere around 45 PE. Okay, but if you compare it to a global peer, for example, let's say Emaar, okay, which is a UAE based company. It's a global developer. If you come watch like shows in Dubai Fountains, Burj Khalifa, all that has been built by Emaar. They trade at a PE of 10. Okay. Now this is the magic, and this is the point that you need to understand as an investor. That, see, boss, if you are investing in Indian stocks, especially some explosive large caps, which are always in the news, you will pay very, very high PE. Now, this is not wrong. This is okay. Not a problem. But this is where people lose money, right? How exactly? A case study. We have watched the case of Asian Paints. That Asian Paints, great company, but it was trading at a very high PE. A lot of like extensive fund managers, I'll not name them. I've made videos and all that, right? I mean, you guys watch and do your due diligence. They bought like Asian Paints at very high PE, okay? And they lost money, right? 4 or 5 years, nothing happened. Same had happened with ITC at a certain stage. So in Indian market, what is likely to happen going forward is that these type of large cap companies, which are sitting on very high PE, if they are unable to deliver growth, then their valuation is going to get crushed and you will get locked in for 5, 6 years, 7 years even, where you are unable to withdraw your money and make any sensible returns. So then comes a natural response that, okay, whatever you have been saying, it kind of makes sense, right? So if I were to design a portfolio and I'm like a new investor, what are the lines on which I should think and what type of stocks I should pretty much look into? See, your stocks can be divided into a bunch of different ways, right? I'll just highlight some themes. For example, many a times people come to me, say that, you know what, just tell me like 10 stocks that I can buy and forget. Okay. Now these are consistent stocks where you are seeing very good business clarity that, okay, these companies are going to grow at 15-20%. Now this is less of a company question, but more of an industry question. For example, if you're buying artificial intelligence, semiconductor stocks, machine learning stocks, etc., then those industry themselves are growing at like 15-20%. And companies like Google, Amazon, right, Meta, All these companies, Netflix, these will continue to do fairly well. That is based on the current business model, that's the projection that we can do. Now, of course, these projections can change depending on the new data that is coming, but it's very unlikely that Google is not going to benefit from the AI revolution. Now, can I highlight similar companies in India? Absolutely not. Okay. In India, every company is set for disruption right now. A classic case study would be Starlink coming to India. Why? Because Donald Trump, pushed his buttons, right? I mean, pushed the buttons of Indian leaders and brought Starlink into the mix, right? So that disrupts the telecom industry in India. Now, now we'll see how that war plays out. But see, if there is a superior product at play plus regulations on their side, then they are going to win certain markets. In India, the problem is large cap companies are pretty much protected by regulations. So be a little bit careful. I would not put any money on consistent type of stocks in the Indian markets right now, unless of course I'm getting a massive discount. The second is that if you're looking to identify multi-baggers sitting in 2025, what do you need to do? Well, you need to go into new markets, right? So new markets. For example, Indian market generally is very over expensive. Okay, so the PE is very, very high. On the flip side, if you go to the US market, the PE is not very crazy, but there is already a lot of traction on like Google, Meta, Facebook, that stuff. So what do you need to do? Well, you need to go to new markets. For me, that market is Latin America, right? So this is one segment that I'm looking at. There are a couple of listed companies which I would encourage you to study. One is called as Mercado Libre and another is called as NU or New Bank. Okay, both of those companies are in my stock. You can see it from here. Since the time I've bought it, they have gone up quite dramatically. I'm sitting on very good, healthy profits, right? So again, if you guys are interested, I do run this community. You can check the links in the description comment box. This is there. The second type of multi-baggers that I would be betting on are an absolute high growth industry. For example, CRISPR technology, okay? Data centers, right? So in India, you will find some data center stocks. CRISPR, you will not find anything in India, but for that, you have to go outside India. Some of you would ask that, hey, how do we buy like Mercado Libre? How do you buy like NU Bank and all that stuff? Well, you can go and check out the app called as Vested, right? You can use my referral link. You will get special discounts also. So in case you are interested, you can do very easily. This is 100% legal. There is no problem. Vested has a partnership with HDFC Bank. So you can check it out. If diversification kind of makes sense for you, please do it. Okay. So this is point 2. Third is tech. I see zero value in owning Indian tech right now. There is a lot of churn that is happening. For example, if you consider TCS, Infosys, they had not really innovated. Now they are being forced to innovate because they have been sitting with a lot of money on their balance sheet. They will now put it in R&D. R&D cycle will typically be like 3 to 5 years. So next 3 to 5 years, their profitability will come down. And whenever profitability comes down, the stock price typically does not grow, right? So this is my hypothesis. Of course, I can be wrong. Rest is your call. You do whatever you like. Hospitals. Now in India, hospitals and insurance are a much better bet compared to American hospitals and insurance. Why? Because those markets are mature. In India, you purchase like Max. On Max, I'm sitting on 100% plus profits. Okay, and I have not sold anything and I do not plan on selling it or trading that stock, all that stuff. Reason is that these are buy and forget type of stocks in India, at least as of now. So buy as many hospitals as you possibly can. Okay. So this is point number 4. Large caps, be a little bit careful. I had already issued a note, right, regarding Indian large caps. These are very good to trade. Okay. So let me show you this chart, right, which has to do with Nifty banks and banking stocks in general. Many of you know that I had been very aggressive in terms of buying banks over the last couple of years. They have done extremely well, right? Exceedingly well. In fact, let me show this to you. So this is banking Nifty. In India, most of the stocks need to be, large cap stocks need to be traded. Okay, so this is called as trading. So here I had cut almost like 60-70% of my positions now on bank, right? I have rotated it to other sectors. I'll issue a note also which sectors I'm going to. But long story short, you need to learn how to do basic trading. In case you want to learn all these things formally, I do run a course. I do offer services around this. In case you are keen, check it out, right? And if it helps your portfolio, then why not? I always encourage people to learn and customize, curate their portfolio, at least understand what a good portfolio building is. So even if you're giving your money to mutual fund managers or whatever, at least you will have a sense when to pull out money. Okay. So I hope that this was interesting, insightful. It gave you a sense. Honestly, just think about money from a very independent viewpoint. It's a way to gain more freedom in the world. The more diversified you are, the better it is. And I'm already seeing results for myself. And this is what exactly I encourage my students to do. Thank you so much for watching, and I'll see you soon.